Hey guys, how's it going? It's Andy from Magoo Investing. Today I'm going to be giving my breakdown of my stock portfolio for May of 2019. And so this portfolio has not really changed a lot. One of the big changes is when I sold my Roku shares pretty close to the top. It has now had a huge recovery since then, but I'm no longer in that. Still a stock that I love, but I missed the timing on it and it already went up. So I'm going to stay away from that. But so at this point, I have around $700 worth of just normal stocks, and then I have like $1,700 in long-term ETFs. So I'm going to be talking about my stuff that I have on Robinhood, which is my shorter-term investment platform. And so the way that I kind of have it broken down is I have a majority of my funds, I think it's around 60 to 65%, in TQQQ. And basically what that is the 3 times weighted NASDAQ ETF. And this is probably the stock that I recommend the most for people because it just follows the market and goes whatever the normal NASDAQ does, multiplies it by 3. And so if you follow this channel at all or have seen anything about the stock market, you know that on average it goes up. And so if you're pretty comfortable with the money that you've got in there, maybe not put a lot in there because it can go down by a lot. But if you're kind of feeling pretty good about the market like it has been since this new year, you can reap in the benefits really well. And so that's kind of what I've been doing. And so I've just kind of been keeping my money in there, waiting for a big pullback, which is potentially what we're getting right now. So I might be getting out of TQQ, might be getting back into it later, who knows? It's another decision for later. But so most of my shares are in TQQQ, and that's just because it's the safest bet. It follows the market, and if the market does well, which it normally does, I'll be looking pretty good. And so the next highest percentage that I have, I believe it's around 20% of my portfolio, is in Yeti. And so Yeti is one of those companies that I love with all my heart. It IPO'd for the second time, I think late last year. And so I kind of stayed away from it. If you want to watch my IPO video, kind of talk about why I stay away from things, you can find that on my channel. But I kind of waited, I listened to my own rules. I waited until all the insiders could sell their shares, and then I got in. It's a company that I love, a company that I wouldn't be that worried on holding for a long time, kind of what Warren Buffett says, buy a company that you'd be happy owning 15, 20 years from now. I think Yeti's in it for the long haul, and that's why I got in. Unfortunately, they kind of grew a little too fast for their own good. And so whenever that happens, you get people that are trying to sell their shares. They had earnings that were good, but not as good as people hoped, and so it's down a lot. And while that's not a great thing because I'm down on my shares currently, that means that I'm going to be able to buy shares of a company that I love at a fantastic price. So I'm going to be waiting to go, maybe not all in, but I might take some of my shares out of TQQQ and put them into Yeti because right now it's at a discount, and what's not to love about that? All right, and then finally, the 2 companies that I kind of have taken up the rest of the percentage, I pretty much have an equal amount of shares of each, dollar-wise, and that is AMD and Pinterest. And I know I'm a hypocrite. I said stay away from IPOs. The reason I bought Pinterest was because, one, my mom said it and my girlfriend said it. And you got to listen to those people that they know about the company more than you do, and so I trusted them. Didn't trust them enough to put all my money into there, but I have a couple shares, and it's been doing pretty well. So just got to listen to the people that know things and kind of just listen for good ideas. So I'll be sitting there for a little bit. And then finally, AMD. AMD was a fascinating company when I first started investing. It went from about $18 up to about $35 in maybe 3 weeks, and then immediately fell back down. And so this is a company that I kind of bought at the bottom. I don't have a lot of shares in it because it's super volatile, and it could just fall at any point. But I think it's one of the better chip stocks. Intel has been getting hammered recently. Micron, MU, not been doing so hot either. AMD's just kind of been steadily doing well ever since it fell from its massive peak that I made to in the summer of last year. So it's just kind of a super volatile stock. It's a company that I like, but I don't trust it enough to put that much money into it. So this is kind of the breakdown that I would recommend for people that are kind of newer to the stock market, especially in a time right now when the volatility, it is starting to pick up a little bit now, but over the past 5 months, it's been pretty steadily been going up. And if it's steadily going up, I don't see any reason why you shouldn't be in TQQ, which is the 3 times weighted. So You get to go the safe route and just get the normal shares, or you get the 3 times weighted and just kind of slowly be riding up with that 3 times weight. So I have a majority of my shares in that, and then the rest are in the company that I love the most, which is Yeti. And then I have some other shares kind of sprinkled around in stocks that I like, stocks that my girlfriend and my mom like, but not super confident with them to put a lot of money into it. But they're just kind of hanging around. Hopefully they'll be doing a little bit better in the upcoming weeks. But yeah, so that's my breakdown for my stock portfolio of May of 2019. Who knows how it'll look by the end of the month. If things keep falling, I assume I'll be taking some more funds and throwing that into Yeti, because right now it's on the sale rack, and whenever I see Yeti on the sale rack, that's when I pick up that kind of stuff. So hopefully you guys enjoyed this video, and I will see you guys in the next video.